Hello and welcome to this Crescent International webinar on demand, auditing accounting estimates, an introduction to ISA 540 revised. This is the first in a series of 3 webinars which will look at ISA 540, auditing accounting estimates. This webinar will give you an overview as to the requirements of the new ISA, and then later in the year there will be 2 further webinars which will look in more detail at the requirements around risk assessment and the auditor's work effort. So, what were the objectives in revising the auditing of accounting estimates, and why was this revision required? There was a view following on from the financial crisis that the auditor's efforts and work around accounting estimates, which can have a major impact on accounts, was not as robust as it could be and was not showing appropriate levels of professional skepticism. Therefore, it was considered necessary to revise ISA 540 to ensure that a more robust set of requirements were in place and to provide appropriately detailed guidance to foster audit quality. This would drive auditors to perform appropriate procedures in relation to accounting estimates and, just as importantly, their related disclosures. And, as with all revisions to ISAs, to ensure that the auditors apply appropriate professional skepticism. The ISA 540 revisions are in effect for accounting periods beginning on or after 15th December 2019, and therefore the first accounting periods likely to be affected are 31st of December 2020, although the principles can be adopted early and many of the aspects of the standard are in fact good practice already. However, if you do have clients that have some complex and detailed accounting estimates within their financial statements, you may want to start talking to them early about how this may impact on the evidence that they need to provide to you as auditor, and in certain circumstances, the work that you as the auditor will need to undertake. So why change the existing standard on accounting estimates and their audit? Well, basically, audit risks are evolving. More complex business environment, more complex financial instruments and other business activities, and therefore a need for greater emphasis on the audit of accounting estimates. I've already mentioned the need to foster more or greater professional skepticism in audit work, which is a theme of all changes to ISAs at the moment. And there's an increased need for public interest benefits to be considered through the improved communication and transparency surrounding accounting and the audit of those estimates. So we're now going to look at some of the slides provided by IAASB, which is the International Auditing and Assurance Standards Board, who developed and released the standards, and some of the key enhancements that they've included within the new standard. And the first one to really focus on, and we'll focus on this in more detail in a later webinar, is what's called the spectrum of inherent risk. What is the risk that the accounting estimate may be misstated within the financial statements, and seeing that this falls along a spectrum of risk rather than at 1 or 2 specific points. The standard introduces the concept of inherent risk factors, which will be key in establishing the risk associated with a particular estimate and enhancing those risk assessment procedures. The standard clearly separates out the assessment of inherent risk and the related control risk that the company may then face in terms of the controls it has in place to ensure accounting estimates are appropriately prepared and reflected in its financial statements. And there is then more emphasis on the importance of the auditor's decision about controls in terms of whether they will seek to rely on those controls, or whether in certain circumstances they may need to undertake controls testing in order to obtain sufficient audit evidence. And then there is a revision to the auditor's work effort, which introduces a concept of objectives-based work effort. And as with other standards, they have also introduced what's called the stand back requirement, which is to require the senior auditor to step back and take an overview of all the evidence provided, both confirmatory and contradicting, and to form an opinion as to whether a sufficient audit evidence has been obtained. And then there are a number of other enhancements requiring information about the communication with those charged with governance, the importance of disclosures, and some new and enhanced application material. So one of the key enhancements was around what's called the inherent risk factors. And these are the characteristics of conditions and events that may affect the susceptibility of an assertion to misstatement. And this must be undertaken before the consideration of controls. So this is the risk around an element of the financial statements before any controls have been implemented by the company. Inherent risk factors fall into three categories. That's the estimation uncertainty. The wider the range of possible outcomes, perhaps, for an event or an account heading, the more estimation uncertainty that will be involved, and therefore the more complex the audit of that estimate may become. The complexity of the accounting estimate will also be an inherent risk factor. If something is very complex, involving significant calculations with a number of factors, some of which are not readily observable, then it will become a complex estimate. And in some cases, an estimate may be subject to subjectivity, i.e. potential for the company to be subjective in the estimate it actually chooses. And there may be other risk factors that the auditor may take into account, for example, a change in the way that an estimate is arrived at, or simple susceptibility to misstatement due to management bias or potentially fraud. So this will be an area that would need to be considered within your ISA 240 assessment of risks of fraud. Therefore, in certain cases, for example, an estimate may be a significant risk within the financial statements and the audit. One of the other key enhancements was around control testing. And here the emphasis is on the importance of the auditor's decision about controls relating to accounting estimates. And it really ties in and highlights the existing relevant requirements of ISA 315, which has also been recently revised, and ISA 330. And there are two decision points here. So if as part of your audit approach, you're going to be relying on the effectiveness of controls, and there is an expectation that they will be operating effectively, or because of the nature of the accounting estimate, substantive procedures alone cannot provide sufficient appropriate audit evidence at the assertion level, then testing of the operating effectiveness of controls is required under ISA 540. If, as well, the risk is seen as being significant and tests of controls are required to address that significant risk, then those tests and controls must be carried out in the current period, if the auditor plans to rely on those controls. But what if you're not intending to rely on the controls? Well, it's likely that these estimates are still going to be significant to the preparation of the financial statement, and therefore there is still an expectation under ISA 315 that you will, as the auditor, have an understanding of the controls that are in place, and perhaps will have performed either an observation or a walkthrough test to ensure the controls are in place. And again, if the the risk is significant or is a key area of the financial statements. If as auditor you feel that appropriate controls are not in place, then that may be something that you will need to raise with the client as part of the management letter. So control testing is a significant element of the assessment of accounting estimates. And so this is separate to the assessment of the inherent risk. The controls are in place to provide evidence regarding the risk that's in the financial statements. You cannot discount the risk because you believe there is an appropriate control procedure in place. The third key enhancement that I want to look at, and which again will be covered in more detail in a later webinar, is around the work effort that is required of the auditor. The standard introduces what's called the objectives-based work effort, and these are requirements which are directed towards the methods that are applied by the entity, including specifically when complex modelling is involved, the assumptions used by the entity in preparing their estimates, and the underlying data, which is a key element of preparing the estimates. And I think it is important at this point to remind you all that the responsibility for preparing the accounting estimates which are used in the accounts rests clearly with the client. If you are asked by the client to help with their calculations of various accounting estimates, that actually is an accounting service. It's a non-audit service and should be considered as part of your audit independence considerations. And for example, appropriate safeguards such as use of a separate team may need to be put in place to ensure that the independence of the audit is appropriate, and in certain cases such as the audit of PIEs, or if the estimates are very significant to the accounts, it may not be appropriate for you to undertake work in actually preparing the estimates that the company is going to include in its financial statements. So to re-emphasize that, preparation of any estimates in the accounts is a responsibility of the client. As auditors, you're responsible for testing those estimates, ensuring you gain sufficient evidence about those estimates in the financial statements. So the testing strategies have been retained from the existing ISA 540, although there is an enhanced approach for developing an auditor's range, and we will look at that, as I say, in a later webinar. The strengthened requirements when management has not appropriately understood or addressed estimation uncertainty. And the standard also clarifies that the auditor is required to comply with the relevant requirements in ISA 500. ISA 500 is the general standard which deals with audit evidence and gaining sufficient appropriate audit evidence to support the overall audit opinion. As I mentioned previously, other enhancements include the enhanced stand-back requirement, an evaluation of the audit evidence obtained, both corroborative and contradictory, to ensure that an appropriate view is being taken on the reliability of the accounting estimates. They've given us some increased and enhanced application material, which is very useful in terms of guiding the approach taken to certain accounting estimates. They've expanded the documentation requirements and emphasised the requirement of communicating with those charged with governance in the appropriate circumstances. This really is a package that's designed to improve audit quality overall. So, within ISA 540, what is the three testing approaches that are highlighted? And the importance is that when you design and perform your audit procedures, that you select one or more of the following testing approaches. And the important thing as well is that you take a neutral stance in terms of applying these testing approaches. So you shouldn't be just looking for evidence that's corroborative to your view or the view taken by the company. You should also include evidence that may also be contradictory, and say it's being balanced in the approach to gaining audit evidence. And then at the end of that process, you will stand back and take an overall view on the evidence obtained. So say there are 3 testing approaches that are outlined by the standard, and the approach that you take will very much depend on the risk and significance of the accounting estimates that you are looking at within the financial statements. So the first one, and this one that we are all probably familiar with and use on a very frequent basis, is evidence from events occurring up to the date of the auditor's report. This normally forms part, for example, of our post-balance sheet events, where we will look at the outcome of certain activities between when we performed our detailed audit work and before we sign off the audit opinion. The second approach is testing how management made the accounting estimate. Again, something that we're all familiar with and is carried out on a regular basis. And then finally, something that's rarer and perhaps not used very frequently at all within small, medium-sized enterprise audits is developing an auditor's point estimate or range, i.e. the auditor develops their own estimate and then looks at that in comparison with that prepared by the company. So I'm going to take a section and give you an opportunity to think about the accounting estimates that you will find in a common set of accounts. And actually, if you've got time, I'd like you to look at those and allocate them to the most likely testing approach for a typical owner-managed business. So I'm going to give you about 30 seconds to think about that. And you can actually pause the webinar at this stage if you want to have a longer consideration or have a discussion amongst your team as to the types of accounting estimate that you may come across. And so I think there's about 14 that have been identified in part of the material supporting the standard that I've identified. You may have others that you will identify as well. But as I say, I'll give you about 30 seconds to think about that, and as I say, pause the webinar if you think that you would like longer on that point. Okay, so I'm now going to move on to the next part of the presentation, which includes the suggested answers to that question. So it's not going to be a complete set, but and I say this is for illustration purposes only because the testing approach will be dependent on specific risk assessments and the natures of the items, and sometimes items on this slide are allocated to evidence from events occurring up to the date of the auditor's reports can move all the way across to developing an auditor's point estimate or range, depending on the specific circumstances. But, and say, just as an overview and to give you an indication of how widely accounting estimates can impact on a set of accounts, we have here a list of potential items. So in the left-hand side, where we often look at evidence up to the date of the auditor's report, is allowance for doubtful debts. We will revisit debtors and see what has been collected, what is still outstanding, is the estimate that was made at the end of the year still appropriate. Accrued expenses, again, we will look through and see what expenses have actually come through in the period up to the date of the audit report. And likewise with stock obsolescence, we can see how stock has actually been realised in the course of business to determine to some extent if the stock obsolescence revision is appropriate. Areas where we might test how management has made the accounting estimate, perhaps depreciation of tangible fixed assets and litigation provisions, although again sometimes litigation provisions may have come to fruition before we sign off the accounts, so we could go back to the testing the evidence up to the date of the audit report. Some work around tax provisions, warranties, impairments, etc., where we'll be testing the model for the carrying value of intangible fixed assets or goodwill, property valuations, and pension assets and liability valuations as well. Although again, some of these, certainly things around pension assets and liabilities, could be an area where an auditor might want to develop their own point estimate or range. And then onto the right-hand side, the higher risk, more complex, more subjective estimates, areas such as expected credit loss provisions under IFRS 9, revenue perhaps from long-term contracts, but again, depending on the nature of the contract, may fall into one or the other, testing regimes, and financial instruments in general, especially where those are instruments which are not easily tradable and where inputs are not readily observable on a market. So say, the slide is just there for illustration purposes to give you an idea of the type and range of accounting estimates you may come across and how, under the standard, you might look to test them. But as I say, it comes back really to assessing the risks of the individual accounting estimates and making sure that you understand the company and the estimates that are included within its financial statements. As part of ISA 540 as well, it's also important to understand what's an accounting estimate and what's an accounting policy. And the IASB, the International Accounting Standards Board, is working on this area and has an exposure draft in place at the moment. And that proposes a definition of an accounting estimate, and that's the judgments or assumptions used in applying an accounting policy when, because of estimation uncertainty, an item in financial statements cannot be measured with precision. The importance of this standard, this requirement, is that it clarifies the difference between the accounting policy and the accounting estimate. As auditors, we have responsibilities around both. We should be looking at accounting policies to consider whether they're appropriate for the activities of the company, and then looking at how those have been applied in arriving at the appropriate accounting estimate. So those estimates, the inputs used in achieving the objectives of the accounting policy. And say we do have objectives and requirements around both as auditors, but it's important to make sure that we're looking at the appropriate element of the financial reporting process when considering accounting estimates. So that brings us to the end of this introduction to auditing accounting estimates. And so we are having 2 further webinars on demand that are planned for release later this year. In May, I'll be looking at risk assessment and how that's considered within ISA 540 and what that means for auditors when they're dealing with companies. And then in June, we'll be looking at more detail around the work effort required in response to assess risks, including the work around controls. That should then give you time to start thinking about how that may impact on your December 2020 year ends, whether you need to start having conversations with your clients around the information that you will need from them, and also making sure that you have appropriate people available for your teams. And say if, for example, you end up in a situation where you need to prepare an auditor's point or range of possible outcomes as part of your audit work and audit approach, will you have the appropriate people within your firm with the time to carry out that work when it's needed? So I hope you found this webinar useful. The ISA itself is available from the IAASB website. It's free of charge to download, but does require registration. So it is useful to have a copy of the ISA available. And I look forward to speaking to you again in May and June with the next 2 steps in this ISA 540 revised webinar presentation. Thank you and goodbye.